Are you looking to position yourself as an active professional trader and investor, looking behind the scenes with company information and research using fundamental data, positioning yourself so that you know when, how, and why to take only the best trades using deep dive research and SEC reports? This video has got you covered. During this video, I'm going to be breaking down live examples that are going to help you differentiate the difference between technical trading and fundamental research, and how we can merge the two together so that you can position yourself as only the best type of trader. Now, the content in this video is going to be only privy to those that know how to do the research, and we've got you covered with the main topics that we're going to be breaking down today. Hey there traders, Sean Kozak here, tuning in again with NeuroStreet Trading Academy. And for the world's best education and trading strategies, make sure you hit that subscribe button and don't forget to turn on that notification bell so that each time we put out content like this, you can get results. Now, make sure you smash that like button so that we know you're enjoying the content. Now, traders, before I go any further, I really want to kind of take a second to explain why this video is much different than a lot of other videos you're going to find online. We're going to be taking you behind the scenes. This type of content is only privy to really sophisticated traders. And we're going to be showing you how to do research. We're going to be showing you how to really position yourself like an expert so that you're never left behind, especially as an investor or a professional trader looking to bridge the market only for the best trading opportunities. Now, what I'd like to do is I'd like to talk about the topics we're going to be breaking down so that you have a deep dive understanding of why this video is so powerful. First and foremost, we're going to talk about the difference between fundamental and technical trading research and how using both of them can position you as even the best trader possible. Then we're going to spend a whole lot of time talking about SEC research and reports. The reason why this is one of the most valuable things you can learn is that a lot of times traders don't realize the power behind knowing how to research fundamentals on companies they're investing in and knowing what the SEC is doing for your public knowledge. And what we're going to also transition into is talking about news catalyst, what it's doing with earnings, what it's doing with fundamental reports, what the analysts are looking at and how it can really change the outcome of a stock that you may be investing in, and more importantly, how you can position yourself for a next opportunity that's coming in the market. And then last but not least, all of this is going to be prepping you for technical trading. We're going to spend time with the research, but then we're going to transition how to get yourself ready for active trading by using the fundamental data that you've spent time learning about. Now, what I'd like to do, I don't want to waste any more time here. Let's jump onto the charts, let's dive down into the research, and let's get you into active trading. Welcome back, traders. We're going to get started here on video number 3, Stocks Explained. This video, we're going to be talking about fundamentals and technicals in relation to the stock market industry. Now, this has got a lot of details in this video pertaining to fundamental research that may or may not be completely transferable into everyday active trading. So take this lesson as a very good primer for theory and deep dive understanding, and then as we bridge through this lesson, we're going to get into more technical aspects of trading and then understanding the accounts and watch lists and scannings. But I do think because the stock market is involving companies and it's involving, earnings and research and so to speak, we do have to cover this video. It's very important. And this will be definitely more important for, say, swing traders and investors. Active day traders trading in the very early onsets of the morning may or may not find some of this stuff transferable, but it's important that you get a good understanding. And I think that if you're going to be a professional in this industry, it's good to know all the details in and out of itself so that you can speak intelligently moving forward. So the first thing I want to do is I want to talk about fundamental analysis. It's one of the most important things in the stock market because we use it to actually validate the technical setups that we're trading. When you look at, say, Forex or futures, cryptocurrencies, so to speak, the very technically driven markets, the stock market has an advantage because there's a lot of fundamentals that are driving different stocks for specific reasons. So that can be a very big advantage, right? And so when we look at fundamentals, we're talking about the assets of a company, the financials, the competitive advantage, understanding the vision and the direction of the of the market. Now, it says day traders here focus less on fundamentals and more on technicals. Yes, that is true, but we rely on the fundamentals to drive the stock's fear and greed mentality because of the hype. So what happens is, let's say a company has earnings or an FDA approval or something that has really some type of hot buzz on the stock. It increases our ability to rely on the technicals because there's a lot of other factors driving participation, okay? And so swing traders will focus on both because you'll need to have an understanding of what's going on with the company if you're going to be holding positions longer than a day. So if you were to be considered long the stock as an investor or a longer term speculator, you would want to be understanding, the stock that you're in, right? You don't want to just be investing in some company that, you know nothing about. And a lot of people do it, right? And a lot of people put their money into stocks because they've seen a post on YouTube or Facebook, or they see something on CNBC, or they see on some Bloomberg, they see a news article, and then all of a sudden they buy the stock, and then they don't understand what happened, and then it tanks and they lose all their money. The reality here is that you need to understand what's going on the bigger perspective if you're going to be an investor or long-term speculator, right? Understand the product, understand the competition, understand the revenue, understand the debt, understand the cash flow, right? One of the reasons why day traders don't have to worry themselves so much about this is because we're not holding long-term positions. But if you are going to be swing trading, let's say stocks, and looking at it in your retirement accounts, it's good to understand this. So one of the things I want to talk a little bit about is understanding catalysts that are going to be driving stocks. Now, like I said, I'm going to get into some deeper dive research here, and it's just good knowledge, but you're probably not going to be doing this on a regular basis unless you're going to be, say, becoming more of a longer term speculator in the market, okay? So SEC filings, right, can cause breakouts on stocks, right? SEC filing can cause a lot of change on a stock. And basically what the SEC is, the Securities Exchange Commission, and they will definitely put fundamental research to gain a deep dive into financial situations pertaining to a stock, right? Because they're publicly traded assets, right? So this requires rules, regulations, legal disclosure of the details, etc. And so there's a website that we're going to use here for this example, and it's the sec.gov website and the sec.gov/Edgar search website. It's all the same. It's just an Edgar search. And the purpose of this is we're going to go through the 10K report annual financials, the 10Q report quarterly financials. We're going to take a look at the float, which is the number of shares available to trade. We're going to talk about secondary offerings, long-term ownership and activists, and then short-term versions and passive investors. And you can follow along this example. You can pause the video and you can go to the websites. Ultimately, the purpose here is to make sure that you understand what we're doing and why we're doing it. And really, this is really a good practice if you're really going to be an investor, if you're really going to be someone that's putting your money into the market for a longer term perspective. It gives you a good deep dive understanding of what's going on with the company. And this is a more professional way of getting an understanding of where your money is being put as an investor. So what we're going to do is we're going to walk through 4 steps. I'm going to use Tesla for an example just because it's a well-known stock and everybody understands it, and you've probably heard of it before. And really the whole purpose is understanding potential catalysts. So we're going to go to the website, then we're going to go into the search criteria, and we're going to enter the ticker, and then we're going to basically start searching for different reports. And the companies by law have to file these reports. That's why this is so important, because they have to file it as part of their mandate for being listed on the exchange, and the SEC requires them by law to have to put these. Like every time they have financials, earnings reports, that's what goes on here. They're publicly putting earnings out on the Securities Exchange websites, and that's where all the analysts and all the prop shops and all the traders start getting buzzed, because the news reports, there's news sites that will scan for these reports to come out, and that's when everybody hits the stocks and they start trading. But really what's happening is the companies are putting their reports on this website, and then all of the other algorithms and all the companies out there that scan for that will notify everybody in the world. So really this is where it all starts, right? So essentially, let's say you want to research the company's float, right? You would need to look inside the 10K filing,
and which is part of their financial reporting. You would follow the steps above and drill into the SEC filings and get the details, right? Let's say you want to find out if a company is going to do a secondary offering and issue more shares to raise capital, right? A lot of times what happens is companies will issue a stock, they'll do an IPO, but in their IPO release, what I'll say, they'll be saying like after a certain period of time, they're going to release a secondary offering to do a secondary raise in the market, which basically dilutes the stock and does a reverse split and then basically brings more pump and dump into the company, which, you know, this is stuff that happens, and that's how companies go out and purposely raise money on purpose, right? It's not to do anything with the stock price. It actually has a lot to do with raising capital for operations, and the stock price is just the result of what happens. So this is where all that stuff would take place. And so I'm gonna just go walk you through. It's a very simple process. Step one is we go to the SEC site. So what I'm gonna do is I'm gonna pull up the website here and give me 1 second. I'm just gonna grab the links. Okay, and we'll pull it up here. So this is the website that we're gonna refer to. Okay, and then ultimately, let's do this here. This is going to be Edgar search filings. So you can go under filings here on this main website. Go under filings and just hit Edgar search and access. Right? I just have it already here. So this is the filings. Okay. And the first thing I want to do is I want to, you know, we're going to enter the site. We're going to enter the ticker. So I'm gonna use an example. Let's say Tesla. So let's just put TSLA in here. So Tesla. There it is. Okay, we're going to click on Tesla. So this is Tesla. This is Tesla's company, right? All of the information that has to be put on here is legally required by law by the Securities and Exchange Commission to disclose their information for Tesla. You could do this for Apple or Google, or maybe you're looking at investing in a stock and you want to get the most accurate research possible. So this is the whole difference between just scanning the website and trying to figure out what's going on with a company versus going right to the source and basically finding out the data for yourself. And this is really, really valuable information because it bypasses all the noise and it gives you the insight to be able to accurately depict that data, right? Earnings, float, secondary offerings, IPO information, SEC filings, insider trading activity, activist purchases, this type of stuff, right? Like let's say Warren Buffett wants to take a position in a stock, you're going to see that in these types of reports because they have to disclose that he's an activist. And so that's really, really important to know that. So let's kind of take a look at the first one. The first one here is we're going to talk a little bit about the SEC filing. So we're going to look at a 10Q report. So you can just type in 10-Q, right? And this is going to be, and we'll type in 10-Q. And then what we're going to do is we're going to nail down and we're going to take a look at, say, like the float, right? I just want to give you an understanding of how you would do that. So let's just type in 10-Q. You can see it's right here, actually. Okay, and what you actually do is you click on interactive data. So I'm just going to right-click it and open up into a new tab so we can stay on this example. And this just pulls up their filing data. And you can see, you could nail down, you could really go in and actually nail down if I wanted to look at how many shares the company has in the float of the company. You can see this, right? You can see that that's how many shares are actively available to trade on the exchange. Right now, that's a pretty high float stock, right? We don't really day trade those high float stocks, but this is just an example. Okay, so that's a great example of trying to find the float, right? And this is just one way of doing that. And I'm going to go to another example here. Okay, we're going to go to another example. We're going to show you, looking at other aspects of this. So if you want to go and take a look at the overview, what the overview will do, okay, is you'll be able to look inside the table of contents, go into the business overview, and what'll happen is you'll be able to read their overview of the company. Like they will tell you what's going on financial statements. The big factor here is earnings and financial catalysts. This is what creates the big moves in the stock in its direction, right? Most day traders don't focus on this, but investors do, right? So if you're going to be an investor in, say, Tesla, right, what has to happen is we're going to go into here, notes, under notes and financial statements, and you're going to click on overview. Okay, and that's going to give you an overview of the stock, right? And it's going to talk like, as of the following September 30th, there has been a continued to be widespread impact of the global economy on COVID-19 pandemic. Look, it says we temporarily suspended operations. Like, this is stuff that they have to put in here to explain this type of stuff to investors and to their shareholders and their board of directors and stuff. So if you're interested in doing really, really thorough research on a stock, this is where it happens. This is the most valuable information because it gives you everything that you could possibly. Now, we're not going to get into a month-long research report going through all this, because literally you could spend a long time researching the financial statements, right? You could research all of the company notes and all of the different information that they have, right? So this is just a really, really great place to do a thorough research. Let's say you are an investor of a company and you actually have stocks in the company and you want to know, what's going on, and you're like, okay, well, I want to find out what's actually happening. This is how you do it. Okay. So let's kind of go into the next example, and let's kind of talk a little bit about the Form S3. Okay, so the Form S3 is basically, it's a filing data research form. The Form S3 is very important as it maps out the details of the post-IPO information about raising more money. Such details include secondary offerings, lowering the stock price, and dilution of the shares. This is important for exposure risk on swing trading investings, right? You don't want to be exposed to such factors. Like, if you're an investor and they're going to be doing a secondary offering and they're going to dilute the stock, that's going to basically cause a major impact on your holding. So you don't want to be in the market when it's happening. You want to be exiting your positions and getting out of the market. So how do you do this? Well, what we do is we type in S3. Okay, we type in S3. Let's go in here and do that. You can sometimes just scroll down and see if it's right here. If you can't see it, then don't go fishing for it. Just type in S3, S-3. And there it is. So you're going to go into the S3 ASR. You're going to hit on documents. Okay. You're going to go into the documents, and you're going to basically, this is going to be giving you all the information in here of the S3. Now, my suggestion here is, if you're going to be doing this, just spend some time. You're going to see it says there is no information. Here's all the documents here. You could read the S3. So if you could open this in a new tab. And this is where it all happens, right? This is you're going to have to do some deep dive digging, read if they're going to be diluting the stock. It's going to be in here. You're going to have to read this report. For the sake of this video, I'm not going to go through all of that, but the point of the matter is that if you want to know if they're going to be doing a secondary offering, this normally is going to be disclosing here. Like, they're going to give you the dates. They're going to tell you when it's happening. They're going to explain what's taking place. They're going to explain why they're doing it and how they're doing it and what the purpose of it is. And so that's the whole reason why we do this is to go into that S3 report right here, okay, and read it and see when are they diluting the stock. So if you're an investor, you want to know that, okay? So let's go to the next example. Because when you do a secondary offering, what ends up happening is they're basically offering more shares into the market, which dilutes the stock price. And then what ends up happening is they do a reverse split after to increase the stock price again, and then it basically just it just becomes an ever-ending process of raising money. So that's an S3 example. An SC13. What an SC13 is, this is long-form beneficial ownership disclosure statements. So like if you have big players, really, really big institutional players, Warren Buffett, George Soros, these guys that are market movers, activists, they're, also, exempt investors or institutional players, qualified big players, that type of stuff. They have to dispose their positions legally into the stock. So that's what we do here. We can look at an S13. We'll go in here. We'll type in S13. So go back to the main search, and we can type in S13. Now let's take a look at this. And then I think there's no dash in this one. That's why I took pictures on, there we go. Give me 1 second here. Go. So we're going to type in SC13, excuse me. There it is. And so the point is SC13 is there, and this is basically a statement of acquisition of beneficial ownerships by individuals. So let's hit the documents, right click on the documents, and there's going to tell you, he's, Bailey Gifford, filed, and these are people. See all the company filings, and that may not be relevant to you or not, but it's just good to know, like if a big player is stepping into the stock, what does it mean, and that type of stuff. Like I said, this is more for longer term investment decisions, not so much intraday day trading decisions, right? The next one here would be, let's say if you wanted to an unscheduled event, like let's say a company's going bankrupt, or they're changing their business model and they're actually planning on doing a merger or an acquisition. Like it could go either both ways. You could, a company could be, looking at bankruptcy, or maybe they're planning on doing a merger. A bankruptcy could cripple the stock. A merger could, really, really do very well. So these types of things are in the 8K file. So let's go in here and take a look. You're going to hit in the 8K. And then you're going to basically, when you go into the 8K, you're going to hit on interactive data. So let's do that first. So let's go back here to the main search site. And I like to do these examples so that I can show you 8-K. There it is. So we're going to click on interactive data right here. I just like to open it up in a new tab. And so we'll click on this. Okay. And when we do that, what we're going to do here is we're going to go back to this for a second. So give me 1 sec. I just want to make sure I give you the right direction here. We click on interactive data. Yeah, right like that. And it says exclude only here. And if we want to, the form for is training and ownership. Okay, perfect. Give me 1 second. Let's do this. So if we click on interactive data, open this up. Okay. This is going to basically give you the information of that file. But one thing you want to do is you want to go back in here and hit include. Okay. Include ownership. So let's hit that. And what that's going to do is you can hit the document here. And there's the information of all the forms that are coming in here, and you can go in here and you can actually just type on these files, and you might say, man, this is seeming like a lot of work. But it really is. This is going to be details on, insider bias. It's going to tell you stuff on whether or not the company is going bankrupt or if it's doing a merger. And that's the whole point of going into these files. It's a little bit of a rabbit hole, not going to lie, right? As a trader, I'm going to tell you straight, it's not something that is done every morning when I get up and I turn on my monitors, I'm not reading SEC filings. But if I'm investing or if I have big holdings in a position or a company, that type of stuff, I would really encourage you to do some due diligence, right? Let's say you work for a company and they give you shares of the company, wouldn't it make sense for you to do a little bit of research on what shares you have and who you're involved with? Right? It's maybe you've got family members that are asking questions about what's going to happen with their accounts and with their holdings. These types of things are quite important, right? So the main lesson here is understand that this website is the best place to go for the most accurate data. You're going to go under the filings, hit the Edgar search and access tool. It's going to bring you up to this, and then everything is essentially under codes. So that's why I was explaining here at the beginning, when I give you the 4-step process, there's a code list here. Okay, 10K, 10Q, the S3, the SC13, the SC13, the Form 8K, and the Form 4. Okay, those are definitely important. Okay, and so this is just where you go to do that research. Okay, so what I want to do is I want to kind of shift some gears here for a second, and the main thing here is giving you guys some insight into news environments. So one of the things that happens in the stock market is news drives the stocks. Does a specific event, the main question is, does the event actually justify the trade activity, right? Technicals are acceptable, but when they're backed by fundamentals, it's the best thing you can ever ask for, because you're now getting a stock that's driven by some positive information, earnings, sales orders, maybe an investor, an FDA approval is a big one, upgrades, downgrades. Upgrades and downgrades don't carry as much weight for longer term traders, but they do for shorter term movements. You could sit there and you could go into the SEC filings. You could check out Business Wire, right? You could go to different websites to check out the news. I actually like one of the platforms that we work with, TC2000. They have a news feed directly into the stock platform. There's a lot of platforms that have that. So if you're using TradeStation or NinjaTrader or TradingView or any of the other platforms out there, there's obviously a news integration that you could get that could give you much better reliable news feeds than, say, just searching on the websites. I'll go to these websites here and show you exactly what that looks like if we click on Business Wire and give it a sec to load here. There it is. So this is a great website for Business Wire. It's a pretty accurate website for news. But the thing here is that you got to search for the data, the information. What I really prefer is, I'll give you an example. Okay, this was a stock that was on my radar here this morning. This was a stock, CODX. I was watching this stock. I had a big level up here at 1750 and at 17, and we got the open off the market. We got the first 5-minute candle to close above the VWAP. I know that may not make any sense to you yet. We haven't talked about technical strategies, but this is a stock that started trading higher off the VWAP. We had increased buy volume coming in off the open, and these were bigger levels that I was expecting the stock to go to. They got right to the whole dollar at 17, which is a really good move. Right, this was the trade right here, catching the long. Okay, it's a really big trade, actually, if you think about it from a day trader's perspective. But the point is that what's really driving it, right? Can I rely on this trade to give me a good trade? That's the question. Can I rely on this to give me a good opportunity? And so if you look down here, instead of me going and trying to search the websites and trying to search for all that information, what I do is I like to just click down here. I have a news window down here, and it's literally easy. You could simply just click on this, hit view news. You could go to news, right? Stock news, and this just pulls up a news list. I have it docked on the platform down here, so I can just click on here, and it says Co-Diagnostic files 100 million mixed shelf, and it covers the sale of common stock, preferred stock, and warrants, right? So this is something that happened to do with their stock. We could pull up anything. We could go up here. What's going on with CBAT? This was a strong stock. It's one of the strongest gappers in the morning. Okay, and what took place on this? We could click on this, and it says CBAT's energy to produce a large size cylinder battery with more energy. Well, that basically is good for the stock, because it has a lot to do with production. It has a lot to do with the company, making steps forward in business. You don't need to be an analyst to decide it. You can let the market tell you that it's accepting it, and just read it. If it's some fuzzy announcement like, weirdness or anything like that, we just don't pay any homage to it. But the point of the matter is it's why we do that, right? And it's why we get into that. So the big thing here is just knowing what we can do from a news perspective, rather than just trying to comb the website all the time and just try to figure everything out. I like to keep things simple and direct you accordingly, and especially if you're going to be in our school and trading with us, it's good to just know that our platforms are equipped to take away a lot of the heavy lifting, right? So when you get into our education classes, you start using the platforms, you're going to be able to learn that and have that as an advantage, so that you're not having to sort through all the websites and try to figure everything out on your own. Now, one of the big things that I find drive the stock has a lot to do with the sectors, right? The sector will drive the stock, and so will the general market. So your stock is not going to just be moving because the stock is moving. Your stock is going to be moving because the entire market is moving and because the sector is moving. And there's 11 sectors, I believe 11 or 12, and they basically what happens is you have all these stocks that make up a sector, all the tech sector stocks, all the energy stocks, all the consumer cyclical stocks. And when the entire sector is strong, it's going to pull your stock up no matter what. Like, you may not even have any information coming out on your stock, but it's going to move, right? So the main goal here is we want to combine both fundamentals and technicals to basically exploit the best opportunities, right? We want to have the best things, best of both worlds. In fact, as an instructor and as a trader, I wish we had that ability in futures and forex and other markets. We really don't. And so it's an advantage to actually trade stocks sometimes because you can actually rely on fundamentals and technicals helping the trade. So I want to talk a little bit about technical analysis because this is an intro course. And so technical analysis is one of the things that we do as a trader, okay? So I'm going to give you an example. It's about pattern recognition. The main charts that we use are candlestick patterns. You can use custom bars, but most of the people are looking at fractals on, say, minute charts. And this is critical because we want to embrace the crowd insight. We want to know what everyone else is looking at. Yes, there's ways to make some custom things happen, and there's obviously ways to kind of make your own custom indicators and stuff. We build a lot of custom software at the school, and we have a lot of developers that code indicators for the platforms we use. But at the end of the day, the masses are looking at what the masses are looking at, and that's the most important for crowd adoption. So when you're trading patterns on stocks, we want to know that a lot of other people are also looking at the same patterns, right? And what time frames they're using, right? So, you know, we're gonna there's different categories of traders, right? Scalping and day trading. You know, you've got a smaller time frame charts and higher time frame charts. You've got swing traders, and then you've got longer term swing traders, and then you've got position traders and investors, right? And so every trader is going to have a different stance. You're going to have different traders are going to look at different things for different reasons. But one of the things that you're going to find that brings everything together is our education courses teach you all of this. So we're going to bring you through candlestick patterns and trend lines and help you understand how to read the structure and price action. We've got deep dive environments on indicators and fractal analysis and how to read the volume, how to read the profiles, what is supply and demand, and where are buyers and where are sellers, and then also looking at the patterns. Patterns are very, very valuable because it tells us what's happening in the market. So we cover extensive lessons on this, right? And we cover extensive lessons on this later in the education and the indicators course. So you're definitely going to want to check those courses out if you're already not a member, or if you already have access to them, great, just carry on. But if you're just in the intro videos and you're going to want to take it to the next level because that's where the active trade rooms are running, you're going to want to learn these things because we teach them into deep dive training modules, right? And it's going to definitely take a little time to learn it, but it's going to be a great place to really understand what's going on. So the main thing here is strategies. Because when you're trading, you know, it's all about the strategies. It really is. You have when it comes to trading systems and strategies, a lot of traders are asking, you know, what strategy do I trade? How do I make money? And basically, the question is, are you trading price strategies, indicator systems, volume systems, combining them, right? What we do at the school is we have an extensive course on this. And the reason for this is because there's many different strategies that our instructors will trade. There's many different strategies for stocks than futures, different strategies for cryptocurrencies than options, right? So we have a strategies course for all of the different asset classes. We also have a strategies course for custom strategies for indicators. And there's also custom strategies for volume, and then we have hybrid strategies, which combine the both. So what's really nice is that, you know, once you go through the intro courses and then you go into the actual education lessons and then into the strategies classes, you're going to have a really, really good understanding of what's going on. And really that's the lesson here, is that you want to build on the basics, get into the intermediate, and then get into more advanced trading. Okay. Now we're going to be teaching you day trading strategies and swing trading strategies because it just depends on whether you're a day trader or you're looking at being a swing trader, right? You may not be able to day trade every day. Maybe you got a part-time job, whatever the case may be, you know, you might be able to take advantage of both, right? Now we will be using several different platforms. Okay. The only thing that will require certain platforms is the custom indicator strategies, right? We have some indicators built on platforms like NinjaTrader, which is a very custom platform for development, TradingView, and TradeStation, right, to name a few. And you know, we have developers in-house that code custom indicators because we want to have an advantage over a lot of things. And so some platforms allow us to do that. So there's going to be sections in the members area that are going to teach you that as well. Okay. So I want to kind of give you an understanding that moving forward, we're going to be teaching you patterns for our stock program. It's very important that you learn the patterns. We're going to talk to you about flag breaks. We're going to talk to you about what an ABC pattern is, pullbacks, and we're going to talk about breakouts. What's really nice about what we do is that we actually have a step-by-step framework that's going to teach you how to learn these. And we have lessons on them. We have a process to understand everything inside of each strategy. We also have examples. We're going to teach you the entries, the exits, and the trade management. And what's nice is that some of the strategies only include price and volume, where others include patterns. So the nice part is that when you learn them, you're going to see there's going to be an overlap between some of them, right? Some of them you're going to see a very big overlap over some of them, okay? So a couple things I want to talk about here is that when you start moving into the education courses, into the strategies courses, okay, we're going to be teaching you how to use different indicators. And traders use indicators to make decisions. So some of the most common indicators that we're going to be using are going to be moving averages, the VWAP, which is called the volume weighted average price, standard deviation channels, oscillators, volume. We're going to be looking at percentage change correlation, and then we're going to be looking at some of the main indicators that are used, you know, just as a market sentiment or a market compass. And like I said, this is a primer video, so you don't feel like, you know, I don't want you to feel overwhelmed or that, you know, there's so much information to learn. Like I said, this is a really, really comprehensive course. We're an academy, so we're here to teach you everything that's necessary over the long game. But what we'll do is we're going to break it down step by step. Okay, so I'll give you an example here moving forward. Is, you know, when we look at stock trading, okay, there's scanners, right? We have scanners here that are going to scan the market. This is a scanner, okay? And these are charts, right? And on these charts, there's indicators like volume. There's the VWAP right here, which is the benchmark for institutional value. Then we've got moving averages here that will tell us the trend direction, so the market's trending up or down, right? We have, you know, this is a higher time frame chart, right? This is looking at a big picture chart, a higher time frame. So I'm looking at a daily time frame. Every one of these candles is 1 day, but every one of these is a smaller time frame chart, right? And then ultimately down here we've got news, right? We have news announcements that are coming out, and there's different tabs for different environments. And this is just one platform. Let me show you another example of how this works on other platforms. So this is the TC2000 platform, and what I'm going to do is I'm going to show you, this is another example. This is a NinjaTrader platform, right? So like we use several platforms for trading off of, depending on your preference. We have other platforms like TradingView. I'm going to show you an example in TradingView. But the reason I'm showing you this is because, you know, we're going to be using, say, TC2000 to scan the market because they're built for scanners. And we'll talk about this in the upcoming videos. But we're also going to be trading a lot off the Ninja platform. And the reason for that is we have a lot of custom indicators on Ninja. And I'll show you another example using, let's say, TradingView. TradingView is a very well-known platform for charters and web-based traders. So TradingView is a platform that we work with. And you're going to see here that there's a main workspace. So this is a great example of you know, a stock. Let's grab a stock that's actually in play right now. Let's just take a look at CBAT. So CBAT's the big player. So let's just go here and let's just put CBAT. CBAT stock. Okay, so there's the CBAT stock. So this is the stock that you're seeing here, and it's just different. We've got indicators that are for there's many different preferences on charting. You know, there's different preferences on charting for trading, and so depending on if you're if you want to use the TradingView platforms, if you're going to be using, say, the NinjaTrader platform, or if you're going to be using the TC2000 platforms, all that matters is that you understand that we're going to be teaching you technical analysis on top of the fact that we're using the scanners for fundamentals. So one of the big things you're going to learn with us in this lesson is that we're scanning for fundamental catalysts. So this is a scanner that we've built. You won't have to build these. We'll teach you all of this in the next videos, but we've built everything for you. So all of our scanners are pre-built. You don't have to worry about trying to build everything yourself. We'll find all the stocks together as a team. You come into our classrooms and learn all this. We've got scannings for big cap stocks and small cap stocks, and right, I can see that there's only two stocks that are really important right now based off our scans on the large caps, and they're not even really in play. Like Walt Disney gapped up and then it crapped out, right? And so there's things here like if I look at this. This is looking for parabolics. I'm scanning the market on 7,000 stocks as a scanner, and I'm able to see that this is a short potential. We came right up here to a very key level. This is a very key level, and this is a 200 period average. You can see this is where we scan for 7,000 stocks to find the stocks that are gapping up into those levels. So this is a parabolic scan, and we're only looking for the main shorts. So if I look in this level and if I want to look at day trading and I want to look for just really, really good trades, I can scan this scanners. Our scanners find all of the opportunities, but then we still need to go in and rely on the indicators. We need to rely on the indicators to tell us what's happening, right? So a good example would be is if we're going to trade this stock, we still need to scan for the opportunity. Let me show you what I would do is I would come in here and I would draw a little line on the sand like that. And then I would come in here to my smaller time frame charts, and this would be where I would look at shorting the stock. I would actually look at, and we don't normally short the stocks as much as a new trader, normally going to be buying the stocks. But as you get better at trading, this would be an opportunity to see this as an opportunity. And if we had scans on the long scans this morning, right? We would have stocks down here. There's no stocks that are gapping down on that scan, so we wouldn't have a trade there right now. And that's really important to know that. There's also swing trading scans that are going to scan the market for swing trades. So I would these are bullish scans and bearish scans. And essentially I'm looking for stocks that are giving me an opportunity to trade bullish trending stocks. So this is basically a scan that's looking for bull stocks that are crossing over. And this is a great example of whenever we come down to, let's say, a major area, we're looking for momentum scans to cross over so that we can see that we're getting into the pullback and we're getting ready to get on board the next push to the upside. So there's a lot of things that we're going to be doing in here for the stock course and for the education courses that you can learn from. And what's nice about this is that the lesson today is on fundamental and technical analysis. If I look at this chart, this is a more of a technical platform, and I really like looking at NinjaTrader because we've developed custom indicators for this platform. So I have indicators on this chart that look at volume and so to speak, but we're still using the same concepts. We're still using the same markets and the same process. So rest assured, you're in the right place. The main goal is to make sure that you understand the difference between fundamental and technical trading. And technical trading involves indicators, and fundamental involves the news. So if I'm looking at, say, Power Polar right here, I want to know, okay, well, what happened on this stock? Chip makers helping tech stocks hang on for the modest rise. So this has to do with a chip. It has to do with a manufacturing report, right? Nothing crazy, but it's enough to drive that stock. Look, it's trending hard. Right, you can see that this stock pulled back. It's in an uptrend, and this stock is moving. It's moving really strong. It's moving very strong. Right, so the entire market could be weak, and in this stock could still be going up because of fundamentals. The other scans that we look at are sector scans. So one of the things that we're going to teach you moving forward is also how to scan the best sectors for the best stocks. So right now I'm going to sort up here for my sector workspace. And like I said, this is all built for you. We're going to be able to come in and scan. Energy is the strongest sector right now. And I can tell you right now that I can go in from the sector, and I can go down here and I can look for the strongest stocks inside the sector. So we're going to go and take a look at this one. Let's scan here. This is a strong stock. So this stock gapped up off the open and it's trading up. Let's take a look at this one. This one gapped up, but it's not trading much higher anymore. This one's, in a downtrend, right? Let's take a look at the industrial industry. The industrial industry is the second strongest index. So if we look at this, take a look at how big that stock's trading high. I mean, that's off the open. This stock, as a day trader, that's an uptrend. We'd be trading, look at the trend here on the 1 minute chart. You could be trading that all the way up to the upside and making money, right? And that's a 50-cent move on a $9 stock. That's already 5% on the stock, right? So these are things that you can look forward to, because rest assured you're in the right place, and we've spent a copious amount of time working not only as a school but with the platforms to teach you how to use this stuff and to find the opportunities. One of the hardest things with traders in the stock market is finding the right opportunities. In futures and Forex, we only look at 7 to 10 markets maximum. So you have to really get in tune with your market. But with stocks, it really doesn't matter. You're just looking for the fundamental and the technical catalysts that are driving the stock. All right, so I hope you enjoyed this video. If you have any questions or you need any assistance, let us know. And we're going to see in the next video where we start talking about your accounts, orders, executions, and starting getting ready into more discussions around active trading. Take care, traders. We'll see you in the next video.
Welcome back, traders. Now, if you like this video, make sure you check below because we've put the links for all of the other videos in the series. Last but not least, make sure that you hit that subscribe button and don't forget to share this video with your friends. Make sure to leave a comment below and ask a question if need be. We'll see you in the next video.